Bill, do I have it right that you were short Treasuries heading into the sell-off we've seen over the past 5 to 6 weeks?
You do have it right. I'm not always right, but I anticipated the possibility, at least, of the 10-year selling off, and it has by 30 to 35 basis points. I mean, at this point, the CRB is up 40% over the past 6 to 9 months. Inflation itself, in terms of the dollar's down 10%. Fiscal stimulation at 2 trillion plus. We had an import price index number this morning that really is 8% annualized, and household income is going gangbusters. And so there's no reason to expect that inflation, at least, not necessarily Treasuries, but inflation at least will be screaming higher over the next several months. And that's what some investors are anticipating.
Well, they certainly are, and they'll be more interested in the term you just used, screaming higher. Commodity price inflation through the PPI feeding into what? Screaming higher means exactly what?
Well, a 40% rise in commodities doesn't necessarily translate into a 3 or a 4 or 5% increase in terms of the CPI, but a decline of 10% in the dollar and the import index, which is related, it was highly influential. And you have to know, or we all know, that fiscal stimulation has been substantial in the past. A lot of it has been saved. Some of it may be spent, and we've got $2 trillion or more to come, as well as an infrastructure bill that most investors are assuming will pass. And so, there's significant demand that is stored up, power that is stored up, that it can be unleashed if consumers want to go in that direction. And I think to a certain extent they will. To 100%, that is the broad question. That's what Chairman Powell tomorrow, I assume, will talk about: how much will be saved, how much will be spent. But in any case, inflation, currently below 2% now, is not going to be below 2% in the next few months. I see a 3 to 4% number ahead of us.